All right. What's up, traders? What is up, tycoons? Super excited for today's video. El Nino, El Nino, El Nino. Okay. El Nino is upon us. We're going to talk about that. We're going to give a very detailed, in-depth analysis of natural gas futures. We're going to take a look at the spot price. All right. We're going to look at BOIL, UNG, break down what I'm seeing on the charts. Okay. And in summary, all right, the United States Natural Gas Fund may still be a good buy due to the developing El Nino, which could cause record-breaking temperatures and boost global gas prices. Europe's decision to permanently shut its largest gas field may increase demand for LNG and further support global natural prices. And despite seasonality expected to take a pause, the UNG fund could provide short-term gains as these factors play out in the coming months. So we're going to break down some of the fundamentals, okay, and look at a few of those things as well as a detailed technical analysis. We're going to take a look at the natural gas spot price, okay, and go over some of the different signals that I use, particularly on the RSI and the MACD, and go over some of the key areas that I'm paying attention to on the spot price. We're also going to look at the larger macro picture, okay, taking a look at natural gas futures on the monthly chart. All right, go over some of the key demand and supply zones here. All right, then we'll break things down on a smaller time frame, such as the 4-hour. And if you guys saw my last technical analysis video on natural gas, we had a great setup here. We had this nice inverse head and shoulders. We needed to break this neckline, and we were going to be looking for a strong push to the upside. And you guys can see we actually got that move entirely, and a very, very nice gains here recently when it comes to natural gas. Okay. And then, we're going to break down UNG, all right, the United States Natural Gas Fund, as well as BOIL, and show how, if you're using some of the strategies and signals that we're speaking of on the natural gas spot price chart, you can see here that they led to 28% trading opportunity on BOIL, a 50% trading opportunity, and most recently, a 48% trading opportunity on BOIL. Okay. So we're going to break down all of that in today's video. Smash that like button, subscribe to the channel if you guys are new. I'm dropping natural gas videos every single week, so this is going to be a great place for you guys to get constant updates every single week when it comes to the natural gas sector. Now, as always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice, so please be sure to read through the full disclaimer. And I do offer one-on-one Zoom coaching sessions. If you guys are ever interested, you can always email me, zachleytrades@gmail.com, and we can work on setting up a time. Today's video is sponsored by Simply Wall Street. It's a really amazing platform that I've used for a while. I'm glad to have them as a sponsor. There's a link in the description or pinned comment down below for a 14-day free trial and up to 40% off for the first 100 people that join. So be sure to use that link. It's a really great platform to do some fundamental analysis on. They have a great website and also a really efficient and awesome app. Now, let's go into it, okay? So the main attraction of the UNG fund is the ability to make spectacular returns in a short period of time. For example, in 2022, the UNG fund raced to a 170% return in 8 months as the Russia-Ukraine war led to spiking natural gas prices. And there are simply few asset classes that can really deliver that kind of short-term returns. Now, seasonality has been taking a break, and so I want to highlight that natural gas prices exhibit very strong seasonal patterns. Back in early April, part of the bullish call was based on the seasonal ramp-up that is typically seen heading into summer's months as traders guesstimate summer cooling demand for natural gas to power AC, right, the air conditioners. Now, typically by mid-June, the summer cooling demand is largely known and traders cash in their bets as they await the fall heating demand season. Now, I also dropped a really good video, okay, back in April, all right, showing you guys that natural gas 69% of the time is green in the month of April, right? That was a very, very in-depth and very good video. And sure enough, natural gas was positive in April. And I also dropped a really, really good video at the beginning of June showing you guys that June historically is a rough month for natural gas. And we typically only see it green about 30 to 35% of the time, which is, again, why typically by mid-June, the summer cooling demand is largely known and traders cash in on their bets as they wait the falling heating demand season. Okay. Now, one thing else that I want to talk about is that most of the country is expecting a hot summer and above normal cooling demand. Okay. So that is what may keep the current seasonality going for a little while longer. Is the NOAA's seasonal outlook, which calls for a hotter than expected summer across most of the United States. And we can clearly see that here, right? So, the darker the shade of red, all right, that's the more likely above. and the orange is leaning above, okay, the yellow is leaning above, and then everything else is going to be basically white is equal chances, and there's not even any chances anywhere on the map, okay, of leaning below. So right now, all of the country is pretty much leaning to either likely above or leaning above higher temperatures across the US. Okay, so that's something that really could be a bullish catalyst for natural gas. Now, El Nino has been confirmed with temperatures likely to break record. Now, the main reason, as I alluded in the intro, was the development of the El Nino conditions. El Nino was officially confirmed on June 8th by the NOAA, with conditions expected to strengthen into the winter season. El Nino tends to cause areas in northern US and Canada to be drier and warmer than usual. All right. If you take a look here, in fact, the developing El Nino could be the hottest on record, as we are already entering El Nino conditions with global sea surface temperatures already near peak levels, despite the cooling effects of a 3-year La Nina. As the current El Nino develops, global temperatures will very likely smash through the 2016 El Nino driven temperature records. Okay, and that's what this graph right here is showing you guys. Okay, if you want to pause the video or take a screenshot or something and look at it a little bit deeper. Okay, now Europe is shooting itself in the foot. And when you look at the Dutch natural gas futures, the Dutch natural gas futures have been on a steep incline since the month of June. Now, that is another reason for natural gas price plunge earlier in the year was the unusually warm winter Europe experienced, which dramatically reduced gas demand. Now, I mentioned this for a long time that, we saw the warm winter narrative be something bearish, but they were pushing the warm winter when we were in spring. Winter was already over, and now we're in summer, and we're starting to see that possibly that whole warm winter narrative that lasted all throughout spring and past the winter could actually result in hotter than expected summer, okay? Now, it appears European politicians are complacent in shooting themselves in the foot, as we recently got news that the Dutch government is planning to permanently shut shut Europe's largest gas field due to environmental concerns, and the surprise move sent European gas prices soaring, with the Dutch TTF natural gas futures almost doubling from recent lows. All right, now if we take a look here, we're going to start going into the technicals, and I want to go over the spot price chart here. Okay, the spot price is going to be very important. If you're looking to trade UNG, if you're looking to trade boil or cold, you need to pay attention to the spot price in the natural gas futures charts. Okay, those are going to reflect what natural gas is doing a lot more accurately than UNG and boil. And one of my favorite ways to spot potential entries and exits is going to be using the RSI and the MACD, and rather than just using them separately, really combining them together so that way you guys can get good signals for potential entries and exits. Now, what do I mean by this? Well, first off, I like to look for a divergence. So a divergence in this case would be where we have a high here, and then we have another higher high here. So price is making higher highs. But when you look at your RSI, remember, this is your relative strength index. You can see here we have a high and then we have a lower high. Okay, so being that price is making higher highs while the RSI is making lower highs, it's a simple term known as bearish divergence, and it's an indicator you may see bearish activity. Now, no one strategy is ever going to be 100% of the time, but you can increase your odds of success and increase your confidence in your entries and exits by using and combining multiple together. So we're just using two of the basics right here, RSI divergence combined with the MACD. And over here, we see the red line cross down below this yellow line here on the MACD. And that's what's known as an exit signal or sell signal on the MACD. So first we get a bearish divergence, then we get a MACD sell signal, and look at price action. We see a sharp decline afterwards. Now, the opposite of that is going to be a bullish divergence, where we have a low here and then a lower low here, but we have a low and then a higher low. So now we're building relative strength on the RSI, increasing, creating higher lows, while price action is making lower lows here. And that is a term known as bullish divergence. We see the red line cross above the yellow line here on the RSI. That's what's known as an entry signal or a buy signal, and we see a sharp move to the upside. And this strategy has worked very well on the spot price chart. You can see over here, higher highs, making lower highs. We get the MACD crossover, big move to the downside. And it's been playing out up until here recently, right? Look at this. Price action has really just been consolidating for a very long time, But look at this extremely long bullish divergence, right? If we take a look here, we have a low, right? Series of lower lows all throughout this time, even over here. And what we've been doing is creating nothing but higher lows on the RSI. We have a low, right? Higher lows, higher lows, higher lows over here. And we've been testing this trend line many, many times. This bullish divergence trend line has been a great bounce area for the chart, right? Every time we come down and test this bullish divergence trend line, we get a nice little bounce. Okay. So this is suggesting, okay, if if these patterns and these strategies want to play out, that we're due for a move up. Now, the moves don't have to be as extended as they are over here in the past. As I mentioned, each time we did hit the bullish divergence trend line, we have seen a small bounce. Okay, so that may be the bullish divergence playing out, and we may never get some huge, spectacular move, but trading the bullish divergence has still offered really good opportunities as we take a look at the UNG and Boyle chart later in the video. Okay. Now, when it comes to the spot price, the major levels that I've been watching have been 187, $2, $2.20, 243, and 279. Those are going to be the key levels that I'm paying attention to right now on the spot price, and really where we're consolidating in between, for a while, right? And those are all historic lows from back in the chart. This is just a screenshot here of, my trading view screen on it. So I don't necessarily have, the ability to scroll back and show you, but those are all historic lows that we had in previous levels of support. Now, this is the monthly supply and demand zone chart, and you can see that over time, right, we've really had this demand zone where as soon as we come down and touch into it, natural gas prices, all right, and the futures have gone up, okay? And so this is an established demand zone, and we've tested it many times over here, okay? Once we zoom in on the 4-hour chart, you can really see the strong reaction, aka the strong demand from buyers within this zone. All right. And currently we're pushing up right to the tip, okay, of our supply zone overhead. Now, it's been a pretty strong supply zone, so we do need to keep that in mind. Each time that we've come in here in this supply zone over the past 3 or 4, even 5 months, right, we've sold off every time. We have not been able to sustain some consolidation and really, flip this supply zone from supply to a demand imbalance, which would create pricing pressure to go to the upside, right? So what we want to see is, instead of the sell-off every time we come into here, what we want to see is we want to start to see a little bit of healthy consolidation, right? We want to start to absorb some of the sell orders and the supply imbalance in this area, and ultimately try to deplete that and try to turn it into an area of a demand imbalance that would push price higher up to our next overhead supply zone. Okay. If you zoom in here on the 4-hour chart, I told you guys that, we had a very nice setup here with an inverse head and shoulders playing out. Okay, we did have a head and shoulders here previously play out, and that played out to the T. And we had the very exact opposite of that. Okay, we had an inverse head and shoulders here. We had the left shoulder. Okay, we had the head. We had the right shoulder over here. And sure enough, we broke our neckline and saw a powerful move to the upside. And we basically hit our target here for that inverse head and shoulders, right? Right in this area. This was our target zone. And you can see, look at exactly where the 2 wicks came up to, right to the top of that little zone here. Okay. That is from our prior levels in the video. And so here, this is where we can see some of those opportunities playing out on the bullish divergence. Okay. So if you notice, we have a low here, we have a lower low here, we have a low, higher low, and then we see a massive 40% move on UNG. Then we come down, we create a new lower low, and we get a smaller rally this time of 16.89%. All right, still while creating higher lows on the RSI this entire time, bouncing off of that trend line. Over here, we make a lower low, and then we come up, we have a 26.8% rally. And over here, most recently, after our latest bullish divergence, we created a 24.33% rally. And we still have a small gap up to fill here just below $7.50, and another small gap up to fill here right around $8. So if it really wants to continue pushing on UNG, there is a chance we could see this thing come up to $8. But we do need to be cautious, okay? Because overall, we've just been consistently making lower highs, right? When you look at the larger trend, we have a high, we have lower highs over here. So we do need to be cautious of that. If we can come out here and take out above the 750 area and create a higher high, that's when we have the chance of coming up here and getting that gap fill right around $8. Okay. And we're seeing the same thing on BOIL. All right. Now, BOIL is doing a stock split here soon, very soon, actually. I've dropped a couple of videos about that already. Definitely watch those. It's going to be, good to know about the stock split and the ratio. Not going to dive too much into that video or into that in this video. But here, again, low, lower, low. We saw a 28% rally in BOIL. Okay. Then we created low, lower, low. Right, 50% rally, lower low again, and we've had a 48% rally. There's got a gap up to fill on BOIL to $3.67 at its current price of $3.31. That's not very far away, so we'll see if that's going to be possible. One thing worthy of noting is that we rejected 334 right here, which was our 61.8% Fibonacci retracement level. If you don't know, nothing moves in a straight line down or a straight line up. You get a move down retracement continuation of the trend, right? Or move up retracement continuation of that trend. And so that's what these Fibonacci levels are here for, to establish the healthy retracement levels. So we had to move down, we came up to the healthy retracement level. And if we stay below 334, there's a chance that we could continue that downtrend. Right. But if we're able to break above this level and flip that to support from resistance, then that's how we can possibly get a 100% retracement and even a reversal and start a new uptrend. Right. That's how you use the fibs, is for that trend continuation. Or if you move down, retrace, and you start to consolidate and break through those fib levels, that's how you can spot a potential reversal. Okay. So 334 is going to be a major resistance level. Definitely pay out lots of attention to there. If we're able to flip that to support from resistance, we could head up to 432. Remember, these prices will be adjusted after the stock split here coming soon. So you always want to keep that in mind. Now, remember, you guys can email me anytime, all right, for a one-on-one coaching session, exactlytrades@gmail.com. And don't forget to check out today's sponsor, which was Simply Wall Street. There's a great, platform that they have. They have a really amazing website and also an amazing app. You can get a 14-day free trial and up to 40% off for the first 100 people that join. Thank you guys for watching today's video. Smash that like button and subscribe.